Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it should be taken as any form of advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. Fed speak, it's certainly becoming an absolute key part of FX movements over the last couple of weeks, and that's not surprising because at the moment the bond market, that trade that we saw all the way through to April, has very much slowed down. In fact, it's tightened right up, which has actually probably meant that the FX market is actually quite a lot tighter than it was at the start of the year. It's not a bad thing. It just means we've got to look a little bit harder and work a little bit further to try and get goals, orientations, and also sort of leads and trigger points and catalysts to really sort of find a way to trade, which is why Fed speak at the moment is clearly what is driving particularly pairs. And the USD has started to really find some interesting pressure points. I'll come to euro dollar, I'll also come to cable. Same also with dollar yen as well. They're all finding interesting little connections and movements off the back of what's coming out from the Fed. And I've gone through a list, the 6 that spoke last week. Kurita is one of them, Richard Kurita in the vice chair. He's clearly one of them. If you look at Loretta Meister, if you also look at Aaron Rosengren as well, all have very differing point of views in terms of where they sit. What I really want to highlight is this: the majority of them are dovish. There's no doubt about that. They very clearly state that they are believing that inflation is transitory, although not all of them. Some of them are a bit worried about what they're currently doing. Most of them believe that you are seeing good growth and that growth is actually going at a level they want. Some are even suggesting that the current level of policy is perfect and that they're in no rush at all to change on where they currently sit. That's a known. What is different across the 6 of them was when they start discussing tapering, and I think that is a very big key thing. We talked about this over the last couple of weeks, that central bank differentials. So look at the Bank of Canada. They have clearly fired the gun. They've started their tapering program. You're now actually starting to hear some of the more hawkish members of the Fed say they need to start at least discussing some form of tapering program and when it's going to transpire before September. Might not happen at the June meeting, but it needs to start happening. Now that is a hawkish movement, and I think you're going to start to hear more and more on that hawkish side. Look at somebody like Esther George, for instance. You also need to look at, as I said, Eric Rosengren. He's on the dovish side, that's fine. But if you listen to what they're saying, they're starting to actually show signs. Debate is happening, and there is becoming a divide between them. It therefore also has a push-pull factor on the USD, and if any sign of a hawkishness is coming, it's a positive, clearly. And my take at the moment is that they're all saying the same thing in one shape or another, whether they're dovish or hawkish. Growth is good, and growth has got a chance to really expand over the next sort of 18 months. They're just a question of who's worried about that or not. They all believe that inflation is there. It's just a question of whether or not it's transitory or not. So that's a positive in my view from what's happening to the USD. I think that has to be your base case, is it's a positive US dollar movement, and that's where you come to euro dollar. Euro dollar has clearly rejected 121, and that's what we expected. It's now moved away from that. It's at 120 and actually probably likely to move into the 119 handle. Keep an eye on that. I think it's an interesting one. I personally think that in the second quarter that 121 is the barrier. I think if we get the momentum that looks like it's coming out of the US economy, 114 is probably my bottom end of that scale in terms of where we sit. So watch that quite closely. Cable 2, 139.7, bit of resistance. In fact, more than a bit of resistance. The momentum and also the volume really pushes it down. And it's hovering and holding in the 139 handle. It's a question of whether or not you get a break in either direction. And that's what I'm waiting for inside cable. Same with dollar yen. 109, 109 and a half. Just cannot get above that. But it certainly doesn't want to fall away. You don't want to see it go below 108, and it just can't do that either. Very tight range in dollar yen, and considering we've moved up from 104 in February, that's interesting. This is more of a consolidation phase, and I'm watching that quite closely. Well, do you re-break to the upside, or is there going to be a bit of a weakness? I'm waiting for that sort of confirmation before I really get excited about it. And then finally, commodity currencies, they're outside of this trend. Look at Aussie dollar, look at Kiwi, look at CAD. They are doing things that are more wrapped around what's going on in the commodity space, not surprising. Look at copper, look at iron ore, record all-time highs. Demand for agriculture is quite high, explains what's going on in the Kiwi dollar. And then you've got the CAD. The CAD has got tapering, and therefore that's an upside. You then also have oil prices, which are pushing up as well. So they're a little bit outside of it. So I'm concentrating on the differentials Eurodollar, cable, watch them closely. There's some trades there to be had, and there's certainly some breaks coming. And when they go, that's when we grab on.